What are the best indicators to use as a stock trader? I think this is a question that we've all asked ourselves at some point in our trading career. What indicators do full-time stock traders use? What indicators do millionaires use? How can I be able to have an edge on the stock market? Well, I'm gonna make your life extremely simple and extremely easy right now and give you the answer that you're looking for. You wanna be using the 200-day moving average, the 50-day moving average, the 13 EMA, the VWAP, the MACD, and the RSI. Now, I do wanna break these each and every single one down as to when you want to use it, what time frame that you want to use it in, and we're gonna head on over towards the live stream so you can see my computer screen and I can give you guys some live examples. I just want to make sure that you guys enjoy this video, and if you guys do, make sure you smash that thumbs on up and subscribe. I'm trying to get to 200,000 subscribers by the end of 2023, and I really appreciate it if you guys could help me reach that goal. Other than that, Sean over on the live stream, take it away, enjoy this video, and make sure again you guys study on up. Happy trading, enjoy this. We are going to teach you all about indicators. What are the best indicators? Which indicators should you use? How should you really be mapping out your graphs every single day? Because I realize that there are so many different indicators to choose from, but I want to give you guys your basic fundamentals about indicators and where to at least start. A lot of people use different indicators, and that's absolutely a-okay because at the end of the day, indicators do come down to preference, but there are going to be certain ones that are stronger than others. And I want to make sure every single trader knows the most fundamentally sound ones. So the first thing that I want you guys to do is I want everyone to head on over to www.stockcharts.com. Now, when I head on over towards www.stockcharts.com, I'm going to type in any stock. Let's just go with Tesla. And I click enter. Tesla, automatically what comes on up? The 200-day moving average and the 50-day moving average. Okay, let's head on over towards a different website. Let's go over to www.finviz.com. And if I go over to finviz.com and let's just type in Tesla still, Tesla, and I click enter, what's going to come on up? The 50-day moving average, the 200-day moving average. This one did bring up the 20-day moving average. We can also, again, take a look over on TradingView. We could take a look over on any scanner that you guys want, and you'll realize starting on off that every single one of these graphs always have the 50-day moving average and the 200-day moving average. So there's your first answer. Now, you might be saying to yourself, I don't understand what these are. The thing is, these are moving averages, where essentially all it's going to be doing is giving us the average of where this stock has been over the last 50-day and 200-day moving average. We need to know that stock trading is 90% psychology. If the most popular indicator out there in the world was the 72 moving average, I would use the 72 moving average. If the most popular indicator in the world was the 123rd moving average, I would use the 123. But that's not the case. From the moment I started stock trading 10 years ago to where I am right now, every single trader uses the 50-day moving average and the 200-day moving average. And what is the point of indicators? Well, indicators are going to tell us where stocks are going to turn, where they're going to have bounce plays, where they're going to have resistance, where they're going to have support. So for instance, if I want to take a look over on Tesla, and let's just type this over in our charts right here, let's go ahead, take a look over on the daily chart, and let's just add our indicators. Let's go to edit. We can go to add, and let's go to SMA. 200-day moving average, and let's just put this in red, just like it is on stockcharts.com. And let's add this. So when I take a look over on this is going to be a line that everyone's going to be using. Remember, the only reason that we use the 200-day moving average is because everyone else uses it. So if there's a group of 100 people, let's say, and all 100 people buy Tesla, or all 100 people buy some random penny stock, or they all buy some random stock, we know that at around the 200-day moving average, most likely everyone's going to sell. Or if it breaks the 200-day moving average, everyone's going to buy it because they see that it's breaking that resistance line. Remember, if no one used the 200-day moving average, there would be no force behind it whatsoever. If it was a 17 moving average, people may buy at that area. Some people won't buy at that area. It's not known. But since this is a known area, what can you guys realize about this chart? It's actually pretty fascinating. Notice when we come down to the 200-day moving average, it bounces right off of it because everyone uses this moving average. So everyone expects this to hold up as a floorboard. We can also see throughout, the past, we come up towards this area before, we have resistance. We come up to this area, it has resistance at this area. We can come up towards this area very recently. Everyone always sells at this area. So when you are underneath the 200-day moving average and you come up towards it, usually everyone sells around these marks. When you guys are coming down to the 200-day moving average, usually people see bounce plays around these marks. And that's going to give us a great idea and say to ourselves, wow, hey, I can already get an idea of where stocks are going to reverse at. Because we need to remember something at the end of the day. Stock trading is not about what's the best stock. If that's the way you think stock trading is successful, that's already thinking about it the wrong way. I don't care if you want to play Tesla, SPY, Apple, whatever. Stock trading is not about finding what's the best investment. Stock trading is about finding already hot moving stocks and understanding where they're going to have reversals at. If I could play Tesla every single day if I wanted to, but I just want to figure out where is Tesla going to reverse. Tesla will always have movement. If I can know for a fact that we are going to be seeing probably selling at this price of, let's say, 400, I can always go ahead and do a put contract and be able to make money as the stock falls. If it comes down to the price of 300 and I know that everyone's going to end up buying the stock, I could jump in on this play and go ahead and jump in and be able to make money as it rises on up. Start thinking about stock trading as understanding where reversals are going to happen, not just by randomly picking where the best stock is on the long term, because in day trading, we're really just looking for the best overall movement on that day. So the 200-day moving average, very powerful indicator because everyone else uses it. Now, what else can we understand here? We also know that the 50-day moving average also came on up. So if we want to add that, let's go to the SMA. SMA, 50-day moving average. We can go click add right here. And we have something very similar along these lines, where it's going to be a great area where we can see, hey, we have support and sometimes we have resistance at these lines. So just a little heads on up. Notice what happened when we came right here. We hit the 50-day moving average. Everyone ended up selling and started coming back on down. Notice what happened right here. We came on down to the 50-day moving average. We bounced on off it. We started moving itself back on up, right? We don't have to just look at Tesla. We could take a look at anything if we want to. We could take a look over on the S&P 500, the overall stock market, as some traders would say. Take a look over on these two indicators. Some people, again, buy always right next to the 50-day moving average. Some people are saying, oh, I'm going to do a short entry right at the 200-day moving average. Here's a perfect short at the 200-day moving average. Oh, hey, I'm going to do a dip buy right at the 200-day moving average. Whatever it may be, it just gives us more guidelines on where reversals are going to be at. So the very simple answer on what are going to be some of the most popular indicators are going to be the 50-day moving average and the 200-day moving average. That's textbook. Those are your fundamentals right here. But there is going to be something that is extremely important that you need to understand, which is you should only be using these on the daily chart. You guys have already known that I've been stressing on the fact that we use these indicators just because it's a very strong psychological move, which is if I move it, probably again Danny uses it, and if Danny uses it, so does Joe, and if Joe uses it, so does Mark, and if Mark uses it, so does Scott, and if Scott uses it, so does Ashley. We need to stick with this, but we only want to use this on the daily chart. Now, that is my personal preference, and I'm going to tell you guys exactly why right here. Let's go ahead and let's turn off on the minute chart all of our indicators. Now, I'm going to add the 50-day moving average here, and something unique is going to happen. So let me show you what's about to happen when we take a look at the 50-day moving average. Let's click add, and you can see, hey Deck, the 50-day moving average right here looks like it's holding up as a good support and good resistance line. And you might be saying to yourself, hey, this is at the price of $398.70. You can see it up at the top right here. Watch what happens when I put the mouse over the current chart. You can see $398.70. Okay, awesome. But that's only if you're using the 3-minute chart right now. If I switch on over towards a 1-minute chart right now, whoa. Now it's at 398.10. So I thought it was just resistance. Now it's down here to 398.10. Well, let's switch on over towards a 10-minute time frame. Wait, what the heck's going on? Now again, the 50-day moving average is at 401. So the reason why I only use it on the daily chart is because on the daily chart is where the majority of people are going to be using the majority of course, the fundamentally sound indicator of the 50-day or 200-day moving average. Once you start changing their time frames, that's where you're going to get all these different numbers. And remember, we're looking for it as a pack. If there's 100 people in the stock market, I know 95 of them are using it on the daily chart. I know maybe 10 of them are going to use it on the 1-minute chart. Maybe 10 of them are using it on the 2-minute chart. Maybe 10 of them are using it on the 5-minute chart. So there's less of an impact. Some people may say, hey, you know what? It works great on the 5-minute on that day. but it may not work as well on another day. But I always know people are always going to be watching the daily time frame. Little heads up for you guys, the larger the time frame, the more accuracy you're going to have with any of these patterns, with indicators, anything along those lines. So 50-day moving average and 200-day moving average are going to be indicators that we use on the daily chart. Now, I know this is going to bring up the question of, well, what indicator can we use on the minute chart? The minute chart, the only indicator that we're going to use is actually going to be the VWAP, which is going to be the volume weighted average price. This is hands down the most popular indicator on minute charts. And you want to see what I love so much about this team is, let's go ahead and take a look. I'm in a 1 minute time frame. The VWAP indicator is going to once again be the same exact thing as the 50-day moving average and 200-day moving average. It's going to give us an idea of where we want to be able to have reversals, right? And if we take a look right here, I can see that every time we come up towards the VWAP, there's a reversal, here's a reversal, here's a reversal, here's a reversal, here's a reversal. And you might say, what do you mean by a reversal? It means the stock was going up, hit this line, fell back on down. Stock was coming up, hit this line, fell back on down. If I know that every time we come up towards this black line, we're going to fall on down, I could do a put contract. I could be able to make tons of money. That's predictable. We come up to this black line every single time, I can make money. Do a put contract, I make money. Quick little break, cracks it, I can make money. Hits the black line, I can make money. Hit the black line, I can make money. Hit the black line, I can make money. Now, okay, awesome. But what does this have to do with the minute chart? Watch what happens. In the 1 minute chart, we're right next to 400, right? Right next to 460. In the 2 minute chart, we're still at 460. Going to the 3 minute chart, we're still at 460. What was the big difference when we're looking at, let's say, a 50-day moving average or before the 200-day moving average? We got all these different sporadic prices. Let's again add those back again, right? Let's go back over here. Let's go to add. And let's go to add that. It doesn't matter if it's the 50-day or the 200-day moving average. Let's just go with the 50-day moving average right here. We add this. On the 3 minute chart, we're at 398.60. VWAP's at 450. Now let's go back towards something else. Let's go back to a 10 minute chart. Whoa, whoa, whoa. Hey, VWAP is exactly the same. 50-day moving average is somewhere completely different. Let's go to a 1 minute chart. VWAP is exactly the same, 450. 50-day moving average is somewhere completely different. This is not helping us understand where the S&P 500 or where our specific stock or ETF is going to be reversing at this time. So this is why I'm completely against using 50-day, 200-day moving averages on any sort of minute chart. So we're using the 50-day, 200-day moving average on our daily charts. The only indicator that I use on my minute chart is going to be the VWAP. Now, let's go back over towards the daily chart here. Let me turn off some of these indicators, right? And let's go to turn off that because we really don't need it. Let's head on over towards another popular indicator. Another popular indicator that I like to use is going to be what I call the flexible trend line. The flexible trend line is going to be the 13 EMA. So moving average, EMA, and we go to 13, modify color, set color. I like to always just put this into green and I click add. And here is the 13 EMA indicator. Now I'm going to tell you right now, this is the last indicator I use. I use 3 indicators on my daily chart and 1 indicator on my minute chart. 50-day and 200-day moving average. Why is that? Because that's psychological. It's the most popular indicators. And the 13 EMA is also psychological. It's the most popular indicator. Deck, why do you use the VWAP? Because again, that's psychological. It's the most popular indicator on the minute chart. As I stated earlier, team, if you come up to me and say, Deck, why don't you use the 17 EMA? Why don't you use the 32 SMA? Why don't you use this or that? Because out of 100 people, I want to use whatever 95 of them are going to be using. If you come up to me and say, Deck, come here. Psst, I got a secret sauce indicator. No one else knows about it. That's like, again, selling tickets to a concert that no one else knows about. You're going to sell 0 tickets because no one knows about the concert. If you're going to say, oh, I get a perfect bounce play coming on up off my random secret sauce indicator, you don't want to use that at all. You want to use the indicators that everybody knows about because that's where the reversals are going to happen. The 13 EMA is essentially the flexible trend line. Now, who knows what a trend line is? A trend line is essentially going to be a nice plank. So for instance, this is a trend line. A trend line is going to be a nice straight level plank, which is going to be showing us if we are considered bullish at the time or bearish at the time. where we could see this is where buyers are in control, or this is where sellers are in control, or where we could see where this is where buyers are in control, or this is where sellers are in control. And the 13 EMA is just going to be one of the best indicators to know who has direction at this point. Do buyers have direction, or do sellers have direction? Do the calls have direction, or do the puts have direction? And really, who is in control at this moment? So let's turn off really quickly the 50-day and 200-day moving average so you guys can see this even a little bit better. So let's turn off the 50-day moving average. Let's turn off the 200-day moving average. And boom, just like that, we have our 13 EMA. Now, I know you look at this little squiggly line and you start getting a little confused and you say to yourself, I don't really understand what I'm supposed to be looking at. Well, I'm going to make this very easy for you guys to gauge, okay? Think about it like this. Remember this morning, I told you guys every single day we wake up and there is a 50-50 chance of us being successful. I can close my eyes and I could say buy, sell, short, call, whatever. It could go up, it could go down. That's about it. All we want to do every single day is put the odds in our favor. We don't want to have a 50-50. I want to say to myself, Jerome Powell says he's going to be raising rates coming on up. Now, again, I think that's going to lead towards more dropping. Okay, cool. Now we got a 60-40. Oh, hey, not only is, again, Jerome Powell raising rates, CPI data just came on out and it says inflation is rising up even higher. Okay, so I probably should be going on a put side. Okay, awesome. Hey, you know what? We're seeing the market starting to crash. We have a lot of room to fall. Okay, with Jerome Powell, with, again, CPI data, with high inflation. Okay, there's an 80-20% chance. We want to make sure that we always have an 80%, 70% chance of having the stock move in our direction. Not doing 50-50s, but making sure that the odds are in our favor every single time. So what's a great indicator to know that the odds are always going to be in our favor? The 13 EMA. When I wake up every single day, I look at where is the 13 EMA at. So let's take a look here. We can see that the 13 EMA, I'm just going to trace this, is currently underneath the S&P 500 during this month. What happened during this month? Well, we are considered bullish, right? The market is moving on up. But what happened the moment we went underneath this line? Well, we're underneath the 13 EMA, and guess what happened? The market became bearish, which means there's a better room for it to be able to fall. Then, of course, what did we start seeing? Well, we started seeing the market go above the 13 EMA. And above the 13 EMA, there's always a better chance of it to rise than rather than fall, bullish. Then, of course, we have bearish. Then, of course, we have bullish. So, and now what's starting to happen? We're starting to head back over towards bearish. So this may just change our odds from 50-50 to 55-45. And even if that's just a 5% gain on our opportunity to make money, it's better than nothing. So I would rather understand who has control at this time, who has direction. And if I take a look over on the 13 EMA right now, I would be saying that the bears have direction, that they have control, that puts are starting to win because we're underneath this flexible trend line at this time. So when I start adding my indicators on up at this moment, I'm starting to say to myself, okay, I got the S&P 500, my flexible trend line. I can go on over, add my other indicators back into this. And when I add my other indicators, I'm going to be having the SMA, 50-day moving average, boom. I can also add my 200-day moving average. Click this right here. I always set this over into red, boom, and add that. And now that's all I need. That's going to tell me again where support's going to be at. That's going to be telling me where resistance is at. This can show me where we're going to start getting some dumps. That's going to show me where we're going to start getting some bounces. Today, we notice how we got a bounce. Notice how we came on down today and we started bouncing right at that blue line. This is where I got my alert from. If you guys, again, follow me, of course, on Tradecast or in chat, on Twitter, whatever it may be. I said the S&P 500, we have reached a potential bottom. Where? The 50-day moving average, right around 398.40. This is most likely where there's going to be a bounce today. It should be the start of a buy. If you want to do a buy right now, I give you the green light as this is where the bounce play is at. And what can you guys realize? The S&P 500 comes on down towards right at that 398.40 mark. And guess what happens? Now it's starting to bounce back on up. Predictability. We have to use what everyone else is using, not secret indicators that no one is using because there's no power, there's no force behind them. So my daily chart always looks like this. Then on top of that team, guess what I add? You guys already know, my VWAP. And my VWAP indicator is just going to be a great indicator to give me the same exact idea as before. The VWAP is going to tell me where reversals are going to happen and who has current control. If we have been underneath the VWAP the entire day and we have been fading and falling, and every time we hit the VWAP, we start dropping back on down, who do you think has control? Well, obviously the bears do, the puts do. The downside, we have more bearishness towards us. But after falling this entire day, bouncing right off that 50-day moving average, which we could say is right here, I could put this in a blue line to represent the 50-day moving average on the daily chart, there is room to run back up to the VWAP. And at the VWAP, that would be a great area to lock in profits, or for us to be able to say to ourselves, get ready for a put contract. If it ever broke the VWAP, that's a great sign that a breakout could be coming after bouncing off the 50-day moving average. So my charts are always looking like this. I can take a look at the minute chart. I can take a look at the daily chart. I'm going to be using the VWAP a lot more than I use, of course, my daily chart, but this is great because larger time frames are going to be extremely helpful. Now, there are also what we are going to be calling oscillators. And what are those? Those are not going to be overlays. Overlays are going to be our 50-day, 200, 13 EMA, and our VWAP. Let's head on back over to stockcharts.com. I don't use these as often, but these are also very popular indicators. And what these are going to be is, let's take a look over on, let's just say, Tesla. Tesla, the way this works on off, and it's a great indicator, is going to be what's above and what's underneath Tesla. So this is just an example, and you could type in any stock you want, okay? We have our 50-day moving average, we have our 200-day moving average, but we also have something else that's extremely popular. And you guys know that is the RSI. The RSI, how does this work? The RSI is going to be an indicator that is extremely special, where we have a 30 and we are going to be having a 70. Now, anything that is over a 70 or higher is going to be considered overbought. Anything that is underneath a 30 is going to be called oversold. So if a stock is oversold, that means it's been sold off too much. It's too low. But that tells us exactly where great dip buys are at. If a stock is overbought, it means obviously it's up too high. So let's just take a look at what happens when a stock becomes oversold. So for instance, we could see on the chart, this area is shaded, showing us that we are oversold. What happened when we became oversold? We became oversold, and shortly after, a big rally has formed from that. Big rally has formed. But then that big rally essentially led to what? To the stock being overbought. And as we've been overbought, now we've been falling back on down. So you could take a look at any sort of play. Type in your favorite stock. Let's just type in the S&P 500. We could type in the SPY, be able to get a good understanding on how this happens and be able to actually, break this on down a little bit more. Now, we're not seeing any sort of dramatic moves over on the S&P 500, but it's still, a very awesome opportunity to be able to break this down, to be able to understand what may be happening. So let's just take a look and say, where has there been oversold times or near oversold times? So where have we gotten close to being a 70? And where have we been getting close to having a 30 on the RSI? So let's just put in, our blue. Let's go with our oversold areas, or as close as we can towards, again, being oversold. So let's go right here. So what happened when we were oversold? A couple days later, we got a very big spike. What happened when we were oversold? A couple days later, people see this as a dip buy opportunity. We get a very nice spike. What happened when we became overbought? People say, wow, we're overbought. Time to take in profits. Starts heading back on down. What happens when we're overbought? People say, whoa, we're up too high, starting to come back on down. So this gives you a great idea of saying to yourself, hey, should I be getting involved in this play or not? If you see something with an 80 and 85 on the RSI, ladies and gentlemen, what do you think is going to happen within the next few days, or at least the next month? You're going to be seeing a drop because the stock is considered oversold. So if you have something that's completely oversold or overbought, or overbought is what I meant to say before. If you have anything that's extremely overbought or oversold, you're going to see the opposite direction coming on up. So if you want to, and you're saying to yourself, wow, this seems extremely simple and extremely easy, you guys can go over towards www.finviz.com, click the screener button, and what you can do is click all, go on down towards where you see RSI, and just click, hey, I want to short stocks. I want to bet that they're going to fall. Go over towards the overbought side. here's a list of 35 stocks that have an 80 or higher on the RSI that are going to be showing, hey, there's a great chance of these that are going to start dumping on down here very, very soon. So, you got to go through them, find which ones you like, find which ones have some decent volume and such. But these are all stocks that are overbought that have a great chance of crashing in the near future. So let's just say, okay, I want to look for stocks that have decent volume. So let's just say decent volume, over 2 times its average volume. So at least we have, some sort of plays here. And let's take a look over on these. So ADD, this one has a great chance of falling in the near future. BBIO, great chance of falling. BLPH, great chance of falling in the near future. BWMX has a great chance of falling in the near future. These are all plays that have spiked up very, very high in a very short manner and probably are going to start coming back on down in the near future. So they're great shorting opportunities. Now, something I do want to throw out there with being oversold is when you guys are oversold, everyone always says, oh, if it's oversold, it has to come back on up. And the majority of the time, blue chips, yes. But for penny stocks, if a stock becomes oversold, doesn't mean it's going to go back on up. Sometimes these plays are just going out of business. They're just very small micro cap plays and they're not very successful. So don't always just buy a stock just because it's considered oversold. So let's get rid of all this right here and let's actually look at the other indicators. And the other indicator that I want you guys to look at is going to be the MACD. And the MACD is not on the top right here. The MACD is actually going to be what is on the bottom right here. So what's the MACD? MACD, very simple, guys. What we have is whoever is on top is whoever has control. So the black line, right? Notice how we have a black line and a red line. The easiest way to read this is the black line. This right here is going to be representing the bulls. Bulls are going to be buyers. Bulls means they expect the market to move on up, okay? The red, as you guys can expect, the red is going to be the bears. The bears is they expect that the market or that stock is going to fall. Whoever is on top has control, okay? Just like in wrestling, a lot of times if you're on top and you're pinning someone to the ground, you have control. So without even looking at the chart above, if I look at the MACD right here and I see that red is on top, who has control? The bears. Guess what's happening in the stock? The red is on top. Now, it's very interesting. What happens when all of a sudden we have a crossover where bulls become in control and all of a sudden the bulls start moving? Well, guess what? The market starts climbing its way on up and the bulls continue to stay in control until a crossover happens. And once a crossover happens, I'm not even looking at the chart right now. I'm just going to take a guess. I bet you the market starts falling. So once we start crossing on over, guess what happens? The market starts dropping on down and the market started dropping on down until guess what we saw right here? The bulls start taking on over and the bulls and the buyers start moving themselves on up until what happens? We start crossing on over on the MACD. And as we cross on over on the MACD, guess what happens here? We start seeing this a very nice drop and we start seeing very nice weakness. So the MACD is almost like, if we want to think about it, who has control, which also comes down to the 13 EMA indicator, where the 13 EMA indicator is going to tell us who is currently in control, the green line. Also with the VWAP, and the VWAP is going to tell us who's in control on this area. Now let's also take a step back. You're saying, Deck, we're seeing a lot of bearishness on the 13 EMA. Let's go back to the previous day, where we saw all this bullishness. Take a look at the VWAP, bounce play right here, and we stayed above the VWAP the entire time. So as long as you're above the VWAP, bulls are in control. Underneath it, bears are in control. If you're above the 13 EMA, as we showed you guys on the daily chart, bulls are in control. Underneath it, bears are in control. If we take a look over on the MACD at the time, the MACD is going to be showing us what? Who's in control, if bulls are in control or if bears are in control. The 200-day and the 50-day moving average are going to tell us where reversals are going to happen, different support and resistance lines. And the RSI on top of that is going to be telling us when a stock is going to be overbought and oversold. We only use the RSI, we only use the MACD, we only use the 200-day moving average, we only use the 13 EMA, and we only use the 50-day moving average. Those 5 indicators on the daily chart only. The only one that we have on the 1 minute, 2 minute, 3 minute, 5 minute is going to be the VWAP. And the reason why is because that does not change as we move our minutes around. 1, 2, 3, 5. If I do 1, 2, 3, 5 on any of these others, they're all going to give us different answers. That's why we only use the VWAP on the minute charts. Now, these are going to be my main indicators. And as I already stated many times, I use them because they are the most popular. And I think about the stock market as one big psychology, one big sociology, one big experiment, understanding how the mind of traders work. When traders see that we're about to run into an indicator that everyone uses, everyone sells. And as it falls back on down, it comes back down to one, everybody buys. So if you're asking right now, well, what do you think about this indicator? Or Deck, why don't you use this indicator? It's because it's not as popular as these indicators. That's my simple answer. If you want to go ahead and use an indicator that you like and that you have found success with, there's no right or wrong here. If you want to use an indicator that I did not mention, that is absolutely fine. I'm just telling you what I am doing. But I will tell you, it's a very big problem when you start again filling up too much over on these plays. When you start again, just adding things left and right. You ever see an basically like this? I'm gonna get a little too crazy here. You ever see anyone just basically go through all of these and all of a sudden they have all these different things going on? Traders, do not do this. Do not just start adding things left and right and say to yourself, okay, hey, the more stuff I have, the better chance I'm going to have success. If this is what your chart looks like, if that's what your chart looks like, this is a big no-no, because this is not going to be helpful in any sort of way. How can this help me become a better trader? It's not going to be. I'm going to be getting so confused. I'm going to be saying this is working with this, but this doesn't work with this. You should have no more than 3 lines, 3 overlays on your chart. 3 is your max. And if you want to have a MACD on top or a MACD underneath and an RSI, that's fine. 3 indicators at most. Two oscillators on maybe up and down, and only the VWAP on the minute chart. That's it. Other than that, you don't need anything else, because other than that, we're just going to be using support and resistance. Do not go crazy with indicators. I wanted to make sure you guys all understand this. You guys can rewatch this as many times as you guys need, but please use the correct indicators. If you're saying to yourself, well, my guy taught me to use the 10 EMA or SMA or team, you guys can use what you want. I'm telling you what I use for these reasons, okay? And I don't mean to step on anyone's toes. I just want to make sure that you guys get it, all right? So let's again get ready for this afternoon and what's upcoming in this market. But other than that, shout out to you guys. Shout out to everyone here over on Tradecaster.com. And let's keep on crushing it, baby. Hey, congrats. Awesome job and awesome work. Let's make this money. Woo!